Hello and welcome to EBA Day TV, and today we've recreated the Sepa Now panel for you. And so joining me are Karsten Becker from Deutsche Bank and Simon Newstead from RBS and Bjorn Fischmark from SEB. So your panel is very interesting, and in fact I saw it yesterday, and I spoke with Gareth Lodge from Celent, a major analyst, and he said he thought it was the best panel on day one of EBA Day, so it was pretty lively. So, I mean, it was opened up by you, Karsten, where you talked about we should celebrate, and in fact you said, well, as frugal bankers, it won't be sparkling wine, it will be water. And then Simon sort of came in with this sobering reality of this is the work that needs to be done. So, Karsten, you talked about now it's time to celebrate Sepa. So could you give us a bit of a highlight of what you talked about?
Yeah, we can now celebrate the fact that we have a migration end date, February 1st, 2014, which means we now have planning clarity for everybody involved. Banks now can get ready for Sepa mass migration, as corporates as well. From a bank's perspective, the important thing is to be able to really handle mass volumes now, whereas before it was only about processing Sepa, now it's about processing Sepa on a massive scale. That will imply being ready from a technology perspective, but also being ready from a people perspective, where everybody knows everything there is to know, basically, about Sepa. Furthermore, we can celebrate reachability. The end date regulation also stipulates a mandatory reachability for Sepa credit transfer and for the Sepa core direct debit. So that's positive for users because they have that clarity as well. Also positive is the fact that interoperability is a requirement of the regulation, because that really fosters reachability as well, whereas different clearing mechanisms have to be interoperable with each other, and so the biggest possible reachability can be achieved. And the last point I would make is that there has been a further removal of centralization hurdles, so to speak. The central bank reporting that still exists will be prohibited in the near future, so that's positive. We have the equality of charges being expanded to payments, cross-border payments above 50,000 euros as well, another positive aspect. And lastly, there are no more restrictions as to where the account should be located. So a payer cannot tell a payee where the account should be, where the payment is made to. And vice versa, a payee cannot tell a payer where the payer should have their account. So all these continue a regulatory trend that we've seen in the past through the Payment Services Directive and Regulation 924 that really aim at facilitating centralization in Europe.
So, Simon, Karsten made a joke that we should celebrate with water, but that's actually probably a good idea for having a clear head. So you talked a bit about the challenges. What were they?
Yeah, I did. And I'm also in the camp that says we should be celebrating, whether it's with water or whatever else, because having an end date is critically important, and been waiting for that a long time. But yes, in the session yesterday, I highlighted a number of areas that, while celebrating, we need to keep focus on to make sure that the SEPA we end up with is a harmonised SEPA rather than a potentially slightly fragmented one, and also to make sure that we've all got the necessary full planning certainty to be able to complete our SEPA projects. So I highlighted a couple of things that sort of illustrate that. The first is to get the planning certainty, we need to know what all the end dates for the various things in the regulation are. The regulation we focused on 1st of February 2014 as the big date. There's actually 10 different end dates within the regulation, and they appear about 34 different times in the text. So whilst 1/2/14 is the big date, there's a number of member state options. There are various transition periods, and the key there really is that when you're planning your SEPA migration as a corporate or as a payment service provider, knowing as soon as possible what those other dates will be. So which niche schemes will there be, and in which countries will go for certain transition periods. So that's really about planning certainty. The other piece of certainty is to make sure that the whole market has a full understanding of what the text of the regulation says in detail. It's an EU regulation. It has already come into force in every country. So it's vitally important that we all read it the same way. There'd be nothing worse than individual countries or institutions or clients reading it in a slightly different fashion. So that's where, the EBA yesterday put out a press release, launched a guide, which is designed to sort of bring clarity on a number of points of interpretation to try and get a consistent view. That will be supplemented and added to by some work that the European Banking Federation is doing, which goes into some more detail on some of the provisions. And I think the two together will go a long way to giving us the planning certainty that we all need. And I guess my final challenge yesterday was around additional optional services, AOSs as they're known. Not their existence, because the AOS principles are clear that any AOS cannot have a negative impact on interoperability. So the core payment message must stay the same. But the fact that there will be variations, I think, means that we need across the market is full transparency, so everyone knows where they will be, what the differences are, and what to expect. So if you take the case of one of our corporate customers making payments multi-country, they know in each case are there slight differences in some of the additional information that they could provide in the message or some reconciliation information. It's understanding the differences and hopefully in due time being able to kind of bring in some of those core AOSs across the Sepa region and apply them consistently and make them part of the core proposition. So I think AOSs maybe are more of a temporary transition thing in some cases, and it's a question of folding them in. So I think there are a number of things where challenges, yes, solvable challenges, I hope so, and I think if we keep focused on those things as well as celebrating the fact we have a date, we will be able to move to a harmonised SEPA.
Mm-hmm. So Bjorn, you opened the panel saying that bankers asked for SEPA, but you got more than you bargained for. So I mean, where are you? Are you popping open the champagne, or are you keeping us sober?
Well, I think I'll take a glass of champagne while I'm thinking about how are we going to actually inform everybody about this, because I think we have a really big challenge ahead of us now, moving every customer from the legacy payment methods they're using today onto the new SEPA regulation compliant transactions, especially for the direct debit. That is a challenge because there are many new rules in the regulation compared to the EPC rule book. So it is a completely new instrument, I would say, which banks need to understand and also prepare for in a good way. What else? I think one other point that is extremely important, that touches upon what Simon said on AOSs, and that is that there are lots of variations on how you do things in different countries. And I think we have to work very hard on trying to find one way of doing things rather than 50 or 100 different ways. We cannot have fragmentation. We have been talking about mini SEPAs for many years, but we cannot build SEPA based on national rules. So I think that is the really big challenge now, to make sure that we have one set of rules for payments.
Mm-hmm. So I wanted to bring the two major takeaways I got from the panel yesterday. There was a screen that was put up which said, SEPA is going to require XML ISO 20022 for all end-to-end payments processing. That I tweeted that on Twitter, and that got retweeted several times, with a lot of people making comments. Do corporates even know that this is a requirement? So, maybe I'll start because you talked about challenges.
Sure.
Yeah. What's the solution to this?
Well, there's a couple of parts of that requirement. It's very clear that in the PSP to PSP space, whether it's bilateral exchange, whether it's going through a clearinghouse, has to be XML end-to-end. So that bit, I don't think there's any question mark, any dispute on. There's then a very positive requirement in the regulation that gives corporates that are ready and willing to do so the right, as of 1st of February 2014, to request that their bank interacts with them for SEPA transactions in XML ISO 20022. So that means that those that want to be early adopters, those that want to use XML on a broader stage and are ready to, have the right to go to any of their PSPs and interact in that way. Where there's I think more debate recently has been around the other provision that talks about PSPs ensuring that their corporate customers who send files of SEPA payments do so in a way which is XML compliant. And that's led to a bit of a debate that says, what does ensure mean? So what role can the PSP play in that process? And is that a way of finding potentially a number of different solutions to help corporates meet that responsibility? Because the requirement is clearly on the corporates. There's a number of requirements in the regulation that apply directly to users, and that's one of them, but the PSPs have a role to help them. So hence there's been a discussion in the market that says, well, it may well be, and particularly given the deadlines, that many corporates aren't yet ready to make an investment in their own XML compliant system, may well want to look to third-party providers, at least initially, for a sort of a conversion process to allow them to sort of stay with a more native message format that they're more used to. And if that's the case, you could imagine a range of third parties able to support that. And the argument has been, well, why wouldn't banks be on that list of eligible parties who could provide those services? But that's not a no-change scenario, because there's still the need to provide the BIC and the IBAN, at least for the time being. And there's still a need that if a local format has different message components than the SEPA message, there's still the need to make changes. There's still the need to make sure that the message, the payment instruction, is in line with the components of the SEPA message. So it's not a no-change story, but it's a story about how can we as the banking community help our corporate clients migrate to SEPA as smoothly and as an efficient way as possible.
I mean, I think it's sometimes hard for people to realize how much a missing data field, how much havoc that would cause, and it seems like such a simple thing.
Exactly.
Yeah. So, I mean, I wanted to ask you, Carsten, is it the bank's responsibility to help their corporates with this XML conversion?
I would argue yes, because if we did not, I don't want to picture the scenario that happens after the end date when banks are refusing payments from their corporates because they are not in the required XML format. All hell, so to speak, would break loose. I think it is our responsibility, and I would argue though that it's our responsibility in a more of a reactive sense. It doesn't mean that we go out and actively will sell conversion services. It's probably something that we may offer, but we still, for us, the recommendation for our customers clearly still is get ready for XML. But then if we had customers who weren't ready for the reasons that Simon pointed out, we still want to have the option to be able to help them out, basically. But I want to make clear that it's not a sort of competitive offering that we would use to earn a lot of money with. It's more of a reactive customer service issue to be able to help them if need be.
So I wanted to move on, maybe start with you, unless you wanted to talk a little bit more about XML.
No, I just want to say a few words on conversion also. It's very clear that the regulation doesn't mention conversion services in relation to XML standard, and I think it's pretty clear what the intention of the regulation is.
But it's that word, like Simon said, ensure. What does that mean?
Exactly. What does it mean?
Yes.
And I think we have to understand that long term, the intention is that ISO will take over from legacy. And I think that one consequence will be that those services that exist today, where banks support customers sends legacy format to the bank and the bank converts that those services probably not can continue. At least that is my personal interpretation of the situation, that there needs to be put something new in place. So I think that it's more of a challenge perhaps than most people have realized. And also, I mean, we talk about corporates, but we should also remember this applies to public authorities also. So it is quite a huge challenge that lies ahead of everybody that are today sending files.
And I guess just to add a comment on that we need to remember that you can't look at this XML story just in the EU in isolation. There's a much bigger kind of direction of travel, which is in many countries, in many regions, there is a gradual move towards sort of XML ISO 20022
ISO 20022 affects investment banking, financial
exactly.
messaging,
and as other regions start to have the same discussion, it's clear that in due time, and the question is when that will be, then it will make a lot of sense to sort of be issuing payment files multi-currency, multi-destination in this format. I think what we're talking about is a relatively short period in the great scheme of things of coming up with sensible transition solutions.
Mm-hmm. So I just wanted to wrap up the panel with one more takeaway that I took from the talk yesterday was, and I'll start with you, is this idea of there's one payment scheme and 230 payment variations. And someone gave a question from the audience: is this a question of better management of the payment scheme? So I mean, how many payment variations should we have? 100?
No, I think this is a serious problem. I don't think we need that many, actually. I think what is happening now is that national communities are bringing their variations into SEPA. They want to do that, they're used to it, but in reality I think that there are very few really valuable variations that must be kept. There is a way now for such a country to have it as a niche product, so you can designate a transaction as a niche product for a couple of years. But when it comes to payments, most people can make a salary payment or pension payment or a normal payment. I think the regulation and all these provisions will support all these transactions. So therefore I think that perhaps slightly stronger message is needed here, that all these variations are not necessary. We should go for only one solution. And also we should remember there should be interoperability. It should be possible for a customer to move from one bank to the other bank, a bank in another country. But clearly if barriers are recreated in a country which says, well, we are SEPA compliant now, but the same barriers exist today as in the past, we haven't gained much.
Yeah, what do you think of that?
Yeah, I think it's really a thin line of, trying to improve or sort of cater to local needs versus the need for a Europe-wide harmonized payment scheme. So to the extent that local communities are now trying to sort of mimic what they have in place today in their old legacy environment, that will clearly stand in the way of centralization at some point. So again, it's a balancing act. You may want certain improvements, but as Björn said, how many do you really need? My hope is that as users are getting more used to the SEPA instruments after a couple of years after the migration, that the need for having all these local services will also become less and less obvious, because people will start to see the value in SEPA and in having a sort of a harmonized instrument rather than having a local account still in every country in order to take advantage of certain local services that are offered there.
So, yeah, Simon, you talked about the power of national payment identity. So why don't you wrap this up and talk a little bit about that?
Payment identity in the sense of?
Well, we were talking about, the different payment variations, and you gave a phrase about national identity and sort of national payment identity.
Yeah. And I think that's right, and it really builds on the points that Björn and Carsten have just made, that there is a sense that communities, in helping ease the transition to SEPA, are understandably looking to make that as painless as possible and have as little change as possible. And consequently, that's why we're seeing a number of the additional optional services, and that probably also explains some of the reasons why there are apparently, as we learned yesterday, over 230 variants of the technical message standard, where in theory there should be one interpretation of the technical standard. So I think that it's not surprising that we're seeing this variation at this point. And at this stage in the process, when we now have the end date, SEPA migration is happening for real. it isn't a surprise that these things are now coming out. And I'm sure when we get to 2014, there will still be more variance out there than is probably strictly necessary or efficient. But my hope would be that having got through the migration process and having delivered against the really big challenge of moving all the domestic volumes onto the Sepa schemes, there's then a kind of a reflective period and an ability to say, OK, we've got there. Congratulations to the whole market, users, corporates, banks, everybody. But now's the time to say, OK, how can we now improve? How can we remove layers of difference where it's not really strictly necessary in the interests of a more efficient, harmonised solution and in the interests of a competitive single market, which ultimately is what the Sepa project's meant to be about.
Excellent. So I will be sharing a glass of bubbly with all three of you on February 2014. Thank you very much.
Thanks, Liz.
Thanks.